I'm Jason Sondels, lead researcher and co-founder of Cryptoversity. First and foremost, thank you for watching this video. We truly appreciate it. If you find any entertainment or educational value in this at all, please like and subscribe. It helps us help you. And we are not financial advisors. Always do your own research. In the past 6 weeks, we have seen some pretty impressive price action out of crypto. Bitcoin's up 35%. Ethereum's up 65% and showing strength as it moves closer to the merge. Altcoins like Ethereum Classic and Polygon are up as much as 275%. Are you missing out on massive gains as you sit on the sidelines? Or are you avoiding a dangerous bear trap that's going to wreck many retail investors as we tumble lower? On YouTube and crypto Twitter, I see a lot of people saying that the bear market is over. Although I'm extremely bullish on Bitcoin and crypto long term, I see some pretty concerning red flags that lead me to believe that this is nothing more than an overdue relief rally followed by a brutal bull trap. It is my opinion that until the Federal Reserve pivots and stops increasing interest rates as they fight off historically high inflation, it'll be next to impossible for stock or crypto markets to turn long-term bullish. As the Federal Reserve continues to raise interest rates, it's only a matter of time before the United States housing market runs into a brick wall. Jerry Howard, the CEO of the National Association of Home Builders, warned of a grim outlook for the housing market due to a halt in new construction during an appearance on Fox Business. Foreclosure activity is increasing, according to a new report from Atom Data Solutions. Even though home foreclosures were down last year due to lockouts and moratoriums, foreclosure filings have increased. As we can see from this chart provided by Mortgage News Daily, that the 30-year mortgage applications since June 20th are on the decline. This is extremely concerning considering in the United States, most homes are purchased in June, July, or August. You can also see that year over year, mortgage applications are down by 18% and refinances are down by 82%. What concerns me more than the United States housing market is China's housing market. CNBC reports China's property sales are set to plunge by 30%, worse than in 2008. If China's housing market collapses, its effects are likely to ripple across the globe, worsening the macroeconomic environment. Another red flag that concerns me is consumer debt. Consumer debt historically is a leading indicator on which direction the economy is moving. If consumer debt is increasing, it's usually a bad sign that the economy is moving in the wrong direction. As we can see by this article provided by Investopedia, revolving debt, which is mostly credit card debt, makes up nearly a quarter of all consumer debt. It jumped 21.4% in the first 3 months of this year. The data suggests that as inflation has spiked, consumers have kept retail spending at high levels by borrowing more. Another leading indicator that lets me know which direction the economy is moving in is auto repossession rates. This article from CBS News states, more consumers are defaulting on their auto loans, with subprime repossessions up 11% since 2020. The final thing that concerns me, but concerns me the most, is Europe's dependency on Russia's natural gas and oil. Europe, a member of NATO, declared financial warfare on Russia when they invaded Ukraine and absolutely demolished their economy and their currency. A couple weeks ago, Russia turned off their pipeline of natural gas that goes into Europe. They said it's for maintenance reasons, but when they turned it back on, they only turned it back on at 20% capacity. I can't help but to think that this is Russia giving Europe a little bit of a warning of what could come in winter when Europe needs Russian oil and natural gas the most. If Russia was so inclined, this would be the perfect opportunity for them to leverage their situation and get what they want, and that's NATO off of their back. I don't want to sound like an alarmist, but when the United States stopped supplying Japan with oil during World War II, Japan considered that enough of an act of war to invade Pearl Harbor. I would love nothing more than to sit here and say that I think Bitcoin's going to $100,000 by the end of the year. But with these economic conditions and this many red flags and possible black swan events, I just don't think it's possible. With that being said, I'm long-term bullish on crypto, Bitcoin, and blockchain technology. Thanks for watching this video, and I'll see you next time.